Welcome everybody to our Tactical Tuesday Ask Us Anything portion. That's what we're going to be doing tonight, guys. And Tiff was the last one to do this, so I wanted to step in and do one because sometimes we have different answers to different questions, and you're going to find that throughout your whole real estate investing experience. So welcome. Throw in the chat where you're from, who all is here. Let me see your comments. Guys, your comments and your answers to questions. So I'm going to be answering a bunch of questions today, but if you have a specific way that you would answer these real estate related questions, then throw it in the chat as well. Let us know your experience. I know we have a lot of real estate investors here that are quite experienced as well. So welcome everybody. I'm actually, it might sound a little hollow in here because I'm in one of our vacant townhouse condos that we've had for nearing 20 years now, and we did a move out today, and we're going to be doing a move in very, very shortly as we had some tenants walk through, prospective tenants, and getting it rented again. So that's why I'm here, and I figured, you know, instead of heading all the way back to the office or home, I am going to do a Tactical Tuesday on location at one of our townhouse condos. And you know what's interesting about that is a couple of the questions we're going to talk about today are condos and townhouses. And so it's appropriate that we are sitting here. So lots of questions, says Ryan. When are you coming to Atlantic Canada? Okay, first set of questions. I see this. Ryan, I will answer them for you. When are you coming to Atlantic Canada again? No plans yet, Ryan, but hopefully soon. We absolutely loved our time out there. We love the restaurants, particularly in your town. They were fantastic. Yes, I know where you are from. Who tiled that wall behind you? Not me. It was tiled 20 plus years ago when we bought this place, and they have been there ever since. Do you use an app to do move-out inspections? No, we don't use an app. We use the old style triplicate forms where, you know, you rip it off and you give it to your tenant in the move in, you give it to your tenant on the move out, and you have the original the entire time. So that's what we use. It's provided by the city of Edmonton, and it works quite well. It has all the rooms on it. I actually have one, Ryan, now that you say that. This is our form. I just filled one out. Comes in three layers, and you fill it all out. You figure out the condition of every room you're walking through, any issues, and everyone gets a copy. It's nice and easy. So sometimes paper might work a little bit easier than apps, but if you have a good app, maybe share that in the chat, Ryan. Awesome. Okay, so hello, Vancouver, Cape Breton, Whitby, Red Deer, Edmonton, all across country. Yeah, that's a great question. One of our, I can't see who it is, but you have to share your name with StreamYard. But when is Ryan coming out west? That's what I want to know. We always get asked, when are we going here? When are we going there? When are some of you coming out here? That's a good question for you, Ryan. Throw that in the chat, Ryan. Did we increase rent for the townhouse? Good question, Sam. We absolutely did. So this particular 3-bedroom townhouse in northwest Edmonton, Castle Downs area, we have been renting for $14.55 a month, and we just increased the rent to $15.75, so an extra $120 a month. And I'll be honest with you, I have not even advertised it. This little townhouse has quite a community in here, and we got calls and texts asking if we were renting it, and if they could rent it because they want to be close to family or friends. And so we get that quite a bit in this complex. So yes, rents are going up in the Edmonton area. Okay, so let's see. Why am I in the kitchen? I don't know. I didn't know where else to put a background. Better than a wall, so I thought I'd set up in here. Plus the window's right in front of me, so that helps. That was Robin Chapelski. Good question, Robin. Soon. Okay, Ryan. Well, my answer to you is I'm coming out east soon. That's my answer then. Awesome, George. You're coming to Banff in September. So for those of you that don't know, we're having an Ignited member-only retreat live in person in Banff in September. But you have to be an Ignited member to join us out there. We're going to have a weekend of fun and family. It's going to be super cool. We're looking forward to that. Hello, Lisa and Craig from Edmonton. Welcome, guys. So ask us anything. That's our topic tonight, guys. And we have some really good questions. In fact, one of the ones I wanted to touch on to begin with has to do with condos or townhouses. One of the questions that was asked was, please discuss why it's not a good idea to buy a condo. And then we had another question along the same lines asking, where are we here? Asking, let me find it. I have too many questions to go through. But it was along the same, looking forward to your ideas on condos because they seem to be available to buy everywhere. Are they worth it and how risky are they? So what's your opinion, guys? For those of you that are listening, we have 25, 30 of you live right now. Would you buy a condo? Would you buy a townhouse? Throw it in the chat and let me know what your opinion is. And don't worry, there's no right or wrong answer when it comes to that. But one of the ways that I would answer that question is, number one, if it cash flows, I'd buy a condo. Okay, simple as that. What I like about condos or townhouses is the fact that you have a condo association that is then responsible for everything outside. So your doors, your windows, your siding, your roof, that's all taken care of within your condo fee. So yes, you put money aside, you're paying a condo fee or a strata fee every single month, but it goes towards keeping the exterior. Sometimes that includes snow removal, lawn care, all of that stuff that you now don't have to worry about, or your tenants don't have to worry about. This particular complex I'm in, I'll let you have a look right out this window. I don't know if you can see it, but there's a playground right there, guys. And those sorts of amenities are very, very attractive, especially to younger families or people with kids that want to sit on their couch and look outside and watch their kids play in a playground. So very, very attractive. So those are the kinds of amenities that you can get in some condos, townhouses. Now, what I will say is there's obviously negatives as well. So, you're stuck to certain bylaws that maybe in a house you don't have to worry about. There is an extra monthly cost, although it's going towards what we were talking about earlier. Sometimes there's special assessments. If, your building here might be fine, but maybe the building next to you that is part of the same complex, maybe it has a foundation issue, or maybe there's some reason that they have to raise money as far as the condo corp is concerned. And so you might be assessed for the problem of your neighbor. And so that's kind of the downside of a condo, is the risk of special assessments, the risk of your condo fees going up, which, let me tell you, they go up every single year, virtually every single year. And so there's risks, but there's pluses as well. So I would say if you can cash flow, and the beauty as well that I like about condo/townhouses is they're usually at a lower price. So the equivalent property, that if it was a house, this equivalent 3-bedroom, 1,000 square foot, if it was a house, would probably be priced 2, 3, 4 times more expensive in the same neighborhood if it was a house. So you can get into these properties, these investment opportunities significantly lower. Now, I'm going to tell you something. This condo that I'm sitting in right now is probably valued at about $125,000. The value of this is not super high. When we bought it, I think we paid $85,000-ish back in 2006. And it went up to a high of around 200,000 in the Edmonton market here. And then now it went down to about 100,000, and now we're creeping back up to 125, 130, maybe, might be pushing it a little bit. I think it's tax assessed at about 140, but you're kind of in that area. And so they're cheap to get into. 20% down, you're looking at under 30 grand to buy a condo like this. And if it cash flows, we're getting $1,575 a month on a $125,000 property. You're only putting $30,000 down. You can start to get a good ROI on these types of properties. But I'd like to see your guys' comments here. So it depends, absolutely. Condos in metropolitan areas of Vancouver or Toronto. So here's the thing. If you're in an apartment building type condo, then typically speaking, that includes your heat and your water, your sewer. It starts to include all of those things in your condo fee. Maybe even some of them include your electricity. And if those things are included, that's when you start getting extremely high condo fees. So, I've seen $2,000, $3,000 a month condo fees. Well, obviously now you're going to price yourself right out of the market as far as cash flowing in most cases. And so then that's when it makes it really difficult. So the easy way, let's go back to the very beginning. The easy way to answer that question is, would I buy a condo? Is, does it cash flow? If it cash flows, I'd investigate a little bit further. Okay. Awesome. Good. Yeah. So it kind of like a mixed bag here in the comments. I see, guys, some people are fans of them. Some people aren't. I'll buy the townhouse if I can buy the whole complex. I love it, Sam. I love that way of thinking. Ski resorts, George. Yes. If it's a vacation condo, you can do Airbnb or short-term rentals, then that's a +2. That's something that is very tempting, George. I agree with you. We owned one out in Panorama and it was awesome. Okay. Good. Awesome, guys. If you have any other questions, throw it in the chat. I'm here to answer them, anything real estate related. Or as you see what Ryan started out with, even if it's not real estate related, that's okay too. And otherwise, I will start hitting off some of the ones that have been submitted over the last month and start answering those for you. So the next one I wanted to touch on, guys, is not to do with condos anymore. We're going to move into a very, very popular question, and that is, what is one of the best ways to get started? Okay, I know a lot of you, when we ask this question, what are some of your really beginning questions when you were first getting started? I know some of you that are listening right now are newer. Some of you have been around in real estate for a long time. How would you answer that? Those of you that have been around a little while, how would you answer this question? How do you get started in real estate investment? And I'm going to tie in another question with this one that is very, very similar. And let me look it up here again. This question I thought was a really good one too. It was, I have roughly $30,000 to get started in real estate investment. What should I do first? Okay, so those are, two different questions, but I think they kind of tie in with each other, because a lot of people looking to get into real estate investment may not have the capital to go out there and buy a property on their own. So that's where you got to start attracting money. That's where you need to start learning how to raise capital. And so there's a few things to get yourself going, guys. Number one, start researching markets. Start researching what type of properties cash flow in those markets. Start getting some reasons why you're wanting to buy in that particular market. Maybe it's not your backyard, maybe it's across the country, but why would you want to buy in that particular market? What are the reasons? Because you're going to have to explain that to somebody if you're raising capital from them. What type of properties in that market are attractive or cash flow? What type of returns are you going to be looking at? Mainly cash flow, mortgage pay down, equity appreciation. Is any of that expected? How long do you plan on keeping the property? These are all questions you got to start having answers to. Once you have those answers, guys, that's when you can start building your credibility package. Our Ignited members, you know what that's all about. Building your credibility package, starting to build credibility within these different real estate circles, real estate networks like us here in Fearless, and starting those conversations, creating relationships with other investors, and showing them reasons as to why putting your money over here, the place you researched, is a good place to put that money. So where do you start? Number one, doing your research. Number one, being able to speak the language. How do you do all of that stuff? You get educated. So the number one place I would start, guys, is being at every single one of our Tactical Tuesdays. That's absolutely free. It costs you nothing. Watching YouTube videos, that costs you nothing. Joining groups like Fearless here, like you guys are in here already, reading through some of the questions, coming into the group and reading through the questions and seeing what the answers to those questions are, because you're going to be asked them too. And you need to know the answers to a lot of these questions. So this is all part of your education, and it's absolutely free, guys. The next step up, and if I was answering the question, what would I do with 30 grand? Well, you could buy a townhouse condo like this that cash flows, buy it on your own. Of course, you have to be able to qualify for a mortgage. And if you can't, maybe you bring in a partner to do that or to help you out. You create a partnership with somebody so that you can qualify for a mortgage. This is what it's all about. Step number one, learning, education, building your network, building relationships, learning. That's what it's all about, guys. And so for those of you that are here right now, you're doing exactly what I'm talking about. If you want to take it to the next step, you join a program, you join a mentorship program, you get a coach, you do those sorts of things. All of you, I'm sure, are very aware of our Ignited program. It costs roughly $10K to get in. You become a member. You have all the resources available to you. You have all the training available to you. That's one of the best ways. Guys, we have spent, I added it up the other day. We have spent over $150,000. Tiffany and I have spent over $150,000 in the last 20 years on our education, on joining mentorship groups, on being coached, on buying the online courses. Back in the day, it was buying the CDs. It was traveling to specific real estate events so that we could learn in person. And there's costs involved in all of those things. But the rewards that come down the road are well worth it. So remember, you have to be able to invest in yourself before somebody else is going to invest in you. And so jumping ahead and getting that support, getting that mentorship is extremely, extremely important. I'm just going to look at the chat because I've missed a few of these things. Learn strategies. Absolutely. That's one of the ways to get started. Thanks for sharing that YouTube video, Jules. Appreciate that. How do I reach out to investors? So you reach out to investors by putting a post here in Fearless saying, hey guys, I'm wondering, how would you answer this question? Or does anybody want to get together and talk about X, Y, and Z, whatever that might be? Starting to build those relationships. That's how you reach out nowadays. It's so much easier than back in the day when you had to go to a physical real estate event. Now, a lot of that can be done on social media, on Facebook. If you have RRSP funds, invest in first or second mortgages. Absolutely. That's an easy way to get started real estate investment. Lend that money out to somebody else that can put it to work and pay you an interest rate. So if I have $30,000, I could lend it to somebody that is doing a flip on a house or whatever the case may be, wherever they need it. Find out the reasons why they need it. You build that relationship with them. If you trust them, move forward and you can get a decent interest rate on your money. So that's another way to get started. There's so many, guys. That's the thing. And a lot of times the way to get started is very, very specific. So one of the things we do when you come into our Ignited program is we get to know you and your story. Once we know you and your specific situation, we can then set you down a specific road. And that is invaluable to speeding up this whole process. Thanks for sharing that link, Jules. If any of you want to find out more, just click on that link and you can book a call with me. And I will tell you whether you're ready or not and try to help you as much as I can in our phone call. There we go. So let's go to the next question we wanted to touch on tonight, guys. So we've kind of tackled 4 different questions kind of grouped together so far tonight. Let's see what else we should chat about. I'm going to look at my list here. Okay, so John Robbins has a really good question. And he put this post in our group here back on July 4th. He says, I'm really curious about how to structure a joint venture deal. For example, would it be appropriate to simply request the down payment amount? If so, what would their stake look like? Would they have 20% equity or would they rather a concrete exit date and ROI? I know there's a ton of different ways to structure a JV deal. So the easiest way to answer that, John, is that there's multiple ways that you can structure a JV deal. They can be done however you and your partner agree. If you both agree and it's legal and you can put it down on paper, you can do it. But I'll tell you the most common way, because you said this in your question and it was a good way to look at it. Would you simply request the down payment amount? And my answer to that would be no. You don't just request the down payment amount because there's other things. There may be renovation costs. There may be holding costs before, maybe even mortgage costs before you actually get your first tenant in there. You want to have a reserve fund. You might have closing costs, lawyer fees, inspection costs, all of those sorts of things. And so if you use our property analyzer, and if you don't have one yet, guys, just go to investorlife.com, click on the toolkit, and you can download for free our property analyzer, where it's going to ask you specifically all of these questions. And it has all the categories of the things that you want to make sure that you're taking into account as far as your closing costs are. So the way that it normally works is you consider your down payment and all these other costs together. So let's say the down payment is 50 grand and all your closing costs and renovation and inspection and all those sorts of things is another 15,000. Well, now for somebody to invest in that particular opportunity, they're investing 65 grand. Okay, so we don't want to just stick with the down payment. We want to make sure everything is included. If they're going to be a money partner, they supply the money. Okay, they qualify for the mortgage. That's the way it works. And so you want to include all of those things. Now, typically speaking, you have a money partner, you have a working partner. So somebody does all the work, they find the property. And we're going to get into this in another question as to what makes somebody worth 50% as a working partner. I'm going to answer that too. And we'll go through a whole list of the things that they bring to the table. But each of you have 50% equity. So what that means is if it goes up in value, you split that 50-50. The mortgage gets paid down, you split that 50-50. Any cash flow along the way, you split that 50-50. Okay, so all of those things get split 50-50. Now, if it doesn't go up in value, maybe it goes down in value. Maybe it's negative cash flow. So all your results after year one are in a negative and more money needs to be put into that account. Well, you split any negatives 50-50 as well. Okay, so you both take a 50% equity stake in the property. But here's the key that a lot of people forget, and you got to understand this, is that when you go to sell that property, in that 65,000 we were talking about, the down payment and all the closing costs and everything together, that 65,000, your investor gets that 65,000 back first. Okay, and then that's when the gains are all split, going up in value, the mortgage being paid down, the cash flow that was collected. Okay, so they get their money back, and then everything is split 50-50 from that point. Okay, so that's how I would answer that question. And yes, Chris, very happy to have you rejoining us in Ignited again. You're number 3. So there's Chris Carlton, one of our Ignited members, long-term Ignited members, coming back. He wanted to take a little bit of a break, but he's ready to get going again. So thanks, Jules. Jules shared a link to that property analyzer, guys, to help you figure out all the costs involved in buying a property so that you're not missing something. And of course, if you download that, you get a free tutorial along with that as well that explains how to use it properly. Okay, so I hope that answered your question, John. And oh, there you are, John. I just see you say hello. So we were just answering your question. I hope you caught that. If not, then just go back in the replay and we'll make sure that question or that you can hear the answer to that question. All right, let's see here. Any other questions? Throw it in the chat, guys. Otherwise, I am going to go back to some of the ones that have been posted recently. And so here, Alexandra posted this question: as a real estate investor, what is your biggest struggle with social media and building your brand? Very good question. So guys, if you have an answer, okay, excellent, John. Perfect. If you have an answer to that question, I want you to throw it in the chat. I want to hear your guys' answers as well. As a real estate investor, what is your biggest struggle with social media and building your brand? Guys, 15 years ago, social media wasn't a part of being a real estate investor. But as I just talked about recently, that's changed. It's now a big part of it, and it's a big way to network. It's kind of opened up new horizons as far as connecting with other people from all different parts of the country. You know, back in the day, it used to be the little circle you knew within your little city that were real estate investors. And now here within Fearless, we have over 7,000 real estate investors all across Canada. So social media can play a big part of your real estate branding and growing your presence. So what is the biggest struggle? To answer that question, my answer for that would be very simply consistency. And I think for those of you that are on social media, you probably agree that being consistently building your brand, consistently building your credibility, staying consistent on that on such a regular basis is difficult to do. You know, one of the things that Tiffany and I have done to help us build our Investor Life brand, our Fearless Real Estate Investors brand, our Ignited community, in order to do all of that, it's been consistency. Guys, we have done a Tactical Tuesday every single Tuesday. I think we've probably missed 5 or 6 Tuesdays without having something come to you guys here in Fearless since the middle of 2019. And so because of that consistency, that helps to build the brand. It's the same thing with our Ignited members. We meet with them every single Tuesday. We have momentum calls every single Wednesday and Thursday. It's all about consistency, guys. And so one of the things that we always talk about in our boot camp, for those of you that have been to our boot camps in the past, is being consistent on social media, making one post per week, real estate related. Now that post can be on your personal profile, but here's another thing. Maybe you say, well, I don't want all my family and friends to know what I'm doing. Well, first of all, I'd ask you why, because a lot of times that's where partnerships can come from. And that gives you the ability to offer them opportunity as well. So that's how I'd answer that. But secondly, if you were to post something in Fearless, for example, in this real estate community once a week, then your family and friends, unless they're a part of Fearless, won't see it. Okay, so that gives you the opportunity to be consistent, even if you don't want your family and friends to know what you're doing. So that's my suggestion, guys, is be consistent. If every single member here in Fearless, 7,000 people, once a week made a post within Fearless consistently, what do you think that would do for everybody's brand? It would be amazing. This group would just be jumping right off the rails. Facebook wouldn't know what to do with it. But, you know, even if a few hundred of you, those that are really active at this particular point, started to consistently post or answer questions once a week, real estate related, that is going to help you big time build your brand. Okay. So what's the hardest struggle? Consistency. So if you can make a pledge to yourself, guys, to be consistent in your marketing efforts for your real estate business on social media, it will make a world of a difference for your social media platforms. Okay, so interesting events, Kelly. Okay, I hope you're all okay. Yes. Consistency is how I can say, Nicole says, I feel consistency is how I can say thank you to all the people who follow us. I want to show them how grateful I am. And that's a good way to look at it. Because there's two ways to look at that, Nicole, right? You can say, well, who wants to hear from me once a week? Or we can say, what opportunity can I provide for others once a week? How can I help others once a week? And guys, your posts don't need to be teaching something. Your posts could be helping you learn something. It can just be a question that's real estate related that you want to know the answer to. Doing those sorts of things makes a big, big difference. Okay, so I'm not sure who the Facebook user is. I can't see it. I have current lending opportunities for registered funds. Second position mortgage on a property in Red Deer, Alberta. Feel free to reach out anytime for a chat. So see, this is how you get out there, guys. This is how you build relationships. This is how you network, by letting other people know what you can bring to the table. So I'm not sure who that is, but because I can't see it. That's Crystal. Okay, I should have guessed it was Crystal. So Crystal is doing a great job of building her brand, getting out there and being consistent when it comes to all the properties she's involved with. I know she's got a great project going on down in Belize right now, and she's obviously got something going on in Red Deer. So there's always something going on with Crystal, and one of our Ignited members is doing a fantastic job. So way to go. Social media challenge 2023. Should we do some sort of social media challenge? Is that what you're saying, Nicole? That's a good idea. Maybe we'll get you to head that up. We'll see. We'll talk about that. Okay, good. Okay, so there's an answer to another question. Let's move on to the next one. One of the This was put in our recent post today from Wayne Hong. One of the first questions that they had was, how secure were we as investors? Would our capital be protected? And so this is one of the fears that holds a lot of people back when they get started, guys, is how safe is my money? We talked about that last week. That was one of the big fears, that losing all our money. We talked about that last week. But remember, real estate investment is one of the most secure investments we can put our money in. It's actually held on a specific piece of property. So, that's one thing. Secondly, doing our research and building relationships with people that we trust obviously is going to be a little bit more secure than maybe putting money in a stock of a company that we know nothing about. And so, we can always have these fears, but when we look at the positives and we look at the things that real estate can bring to us, in most cases, you're going to find that your money is much more, not 100%, but much more secure when it comes to real estate investment or buying properties. Okay, let's answer another question, guys. I think we're on number 6 or 7 now. Let's see. Yenga, what is the right location to invest in? That was one of your first questions when it came to investing in real estate. And so how do we know what is the right location to invest in, guys? We know that based upon our research, based upon market data, based on economic data, based upon comparing one market to another. We can research the crap out of a specific market and know every single thing about it. But if we have not compared it to another market or another market, then how do we know it's the best one? How do we know it's a good one? So not only researching one market, but comparing that research with other markets at the same time. And it's the same thing that we talk about when analyzing properties. If we just analyze one and we don't compare it to other ones, then how are we going to know if it's any good? And so research when it comes to this sort of stuff, guys. You need to know the answers to it. But Yenga, you had some really good questions here as well. One of the other things you wanted to know when you were first getting started was how to explain why you're worth 50% of the deal as a working partner. And remember, guys, I said I would touch on this. How do you explain you're worth 50%? I'm going to help you with that a little bit by running through what we call our working partners duty list. So this is a list that is in the toolbox for you Ignited members. And this is something that you need to refer to on a regular basis to remind yourself about all the things that you, if you are a working partner, are now responsible of. And this is how you earn 50%. Because remember, guys, a lot of people think, who's going to give me all the money, but then give away 50% of the gains? Why are they going to do that? Well, the reason they're going to do that is because you're doing the work involved. So let me just run through. I'm not going to go through everything, but some of the duties a working partner is responsible for. Weeds out and finds good realtors, finds and analyzes properties, devises the right strategy for the property, completes the diligence on the property, researches the history of the property, confirms the condition of the property, including the structure, the parking, condo fees if necessary, tax amounts, maintenance history, confirms the title, takes note of any liens or obligations against the property, confirms zoning, confirms that the purchase price is consistent with comparable properties, confirms that the neighborhood is acceptable, confirms or reviews engineering drawings for the structure and the infrastructure that's present, reviews service and management contracts if there are any, does daily and weekly market analysis, devises a tax structure to benefit both parties, submits offers on properties, writes the offers, determines the amount on the offer, the condition dates, determines the suitability in a multiple offer situation of whether you want to continue or not, negotiates with the vendor, devises creative ways to make the offer more attractive. That's just the first page, guys. This is a 5-page duty list. Let me continue just a little bit more. In the event that it needs some renovations, they're responsible for looking into the needed contractors, getting quotes, preparing a budget for the project, hiring and coordinating with the contractors, ensuring the project is staying on time and on budget, issues that arise during the project and dealing with them in a timely manner, keeping communication open between themselves and the money partner, letting the money partner know the status of the project. This doesn't include yet, guys, the next section, which is the leasing duties. So writing ads for the property to bring in prospective tenants, selecting which websites to advertise on, showing the properties, putting up signs, updating the ads, making sure that all inquiries are followed up with, conducts the follow-ups after the showings to find a prospective tenant, greets the tenants, answers any questions they might have, conducts interviews of potential tenants, runs the applications for those potential tenants, has them fill out the application form, conducts the credit checks, employment verifications, compiles all the tenant information into a file and keeps it neat and tidy for that money partner, does the move in and the move out inspections of the property, gets the necessary amount of keys cut for that property, deals with all the maintenance along the way. So that's the end of page number 2, guys. And I'm not going to take more time because there's so much more that I could go on. This is a 5-page document that shares all the reasons as to why you are worth 50%. And I'm just scratching the surface there. But when you realize all of the duties that somebody that is a working partner takes care of, then it makes sense why they're earning their 50%. Trust me on that. In fact, being a working partner in the vast majority of our joint ventures that we have, I would say that 50% is actually on the low side. You may end up doing a lot more work on some properties. And there you go, Nicole. Yeah, absolutely. We have done trainings on why you're worth 50% where we go over a lot more in detail of this stuff. So thanks for sharing the links for those guys. Awesome. Both Nicole and Jules, you are on top of it. I love it. Okay, so that is why you're worth 50%. Let's move on. Where can we find reliable market data? Good question, John. We did cover that last week on our 6 common fears and things that hold back investors from getting started. And that was one of the things that we reviewed. So where can you find reliable market data? Usually it's as simple as going to that town or province website. Remember, most towns and cities have economic development officers and departments that are trying to attract business to those towns or cities or provinces. And so what they do is they conduct the research as to what the benefits of their particular town, city, or province are. And so then what you can do is do the research by going to that particular town, city, or province website and go to their economic development section and start doing your research. Look at what they think is so great about their town. Now, do you leave it at that? No. I would also network with other investors that are in that particular town, city, or province. I would ask what their opinions are. Maybe those investors that have owned properties there for a significant amount of time. What have been some of the ups and downs that they have seen while they have owned in that particular town, city, or province? So networking with other ones is very, very important. Throwing a question, guys, in Fearless and saying, hey, what do you think of X city as an investment city? Have any of you invested in there? Get other people's opinions. That helps out a lot. So there's a couple ideas as to where you can go if you want to get market research data. The banks supply a lot of it as well. CMHC supplies a lot of it. And sometimes just by going to Google, you're going to get references from other people as well and their opinions. Remember, they're just opinions, but other people's opinions on particular markets. And yeah, there you go, Nicole. Don't be afraid to pick up the phone and talk to the person who wrote the report. Absolutely. These towns, cities want to attract investors. They want people to be buying there. They want the economic growth to occur in their particular town. And so they're happy to talk to us as investors if we're planning to maybe build a project or planning to invest a decent amount of money in a particular town. They're going to want to talk to us and they're going to make some allowances for us as well. So really, really good idea there. Alberta website, community housing property. Okay, awesome. So there's a good spot. Yes, Nicole, ask the town, what are they looking for? Tiffany and I put an offer on a property out in Nova Scotia when we were there last year or the year before. And we just happened to stop in this town because it had an RV park for our motorhome to stay in for a night or two. And we, of course, we always look at real estate everywhere we are. Next thing we know, we're putting an offer on a big chunk of land. And long story short, our offer was not accepted. But what we did do is we talked to the town and we said, hey, what is it that you're looking for in here? What would you like us to build? What would be ideal from your point of view? And they gave us the details as to what they wanted. And so that is an excellent idea, Nicole. So thanks for sharing that. Okay, good. So there's some ideas. Hopefully that helps you, John, as to where you can do some of this research. Websites and networking would be the easy way to answer that question. Let me know, guys, if I've missed anything in the chat. I don't think I have, but if I have, maybe Nicole or Jules, you can point that out for me. And where are we? 5:43 already. 45 minutes has gone by. We're going to try to get in a few more questions here, guys. And of course, if you have one and you want it answered live, just throw it in the chat. Where should we go next? Colin, one of the first questions you had, Colin Ernst, when you were getting started in real estate investment is how do you invest using registered funds? So really good question. And that confuses a lot of people because RRSPs is dealt with a little differently than cash. If you have cash, you can simply go out and buy a property and use that cash as a down payment. You can't do that with registered funds because you have to be arm's length from a property. You can't use your RRSPs and buy a property of your own. So how is it used in real estate investment? It's used as a lending form. So it becomes a mortgage. So let's say you have 100,000 in RRSPs, just to pick a number, and you want to put it to work. Maybe it's currently invested in a mutual fund or a stock of some sort. Or maybe it's just sitting in a bank and they're investing it for you. Well, what you do is you move it to a trust company, and most people are using Olympia Trust. You move it into a different type of bank account, essentially. And then you have the ability to be a mortgager. Okay, so you are the one that is lending that out. You become the bank to other real estate investors here that might be looking for funds. Like Crystal mentioned earlier, she's accepting funds, second mortgage funds on a property in Red Deer on the project she's doing. So you can now place those funds and the person who's borrowing them from you pays you an interest rate. So that's how you get your RRSPs being used in real estate, lending them out as a mortgage company, essentially. You then decide, is that a good project? Is that a good person? Do they have good credit? You become the mortgage. You become the bank, and you're making those decisions as to whether or not that is something you want to invest in. Yeah, that was one of his first questions, exactly, Nicole, because that's what you had to get going. And look at you guys now. Yeah, it's doing much better now than it was sitting with mutual funds. Absolutely. You know, I think if you were to Google average returns in mutual funds versus stocks versus real estate, you'll get a good idea as to what the differences are. And for those of you that are actually using your RRSPs right now and lending them out on mortgages or investing them in real estate, throw in the chat. I'm just curious as to what type of interest rates you're getting on those funds now in today's climate with today's interest rates. What type of interest rate are you earning when you lend those funds out? I'm curious to know. So for those of you that is doing that, maybe throw that in the chat so that those who are looking to borrow can now start to plan on what kind of interest rate they might have to pay if they're using private lending funds, okay, which includes RRSPs. So I'll give you a minute to throw that in the chat for those of you. I know that on ours, the ones we are lending out, we are getting approximately between 9 and 11%. I know that there's ones out there getting much higher than that. You know, we want to take into account the full risk of the funds that we're handing out. And in some that we're borrowing on, we're getting as low as 6%. Why? Because those lenders feel that we're strong as far as being a borrower is concerned. We've created strong relationships. And so that allows us to then get a lower interest rate. So those things are very workable and negotiable in a lot of times, guys. I provide true 10 to 12% on registered funds. There you go. There's another number that somebody has put in the chat, and I can't see. We're offering 14% on second mortgage under 80% LTV, Sam. So for those of you wanting to lend your money out, there's a good example. Sam's willing to pay 14% interest on that money. So on 100 grand, you'd earn $14,000 in year number one. Probably, I'm going to guess, significantly better than what you may be earning through your mutual funds right now. Another Facebook user, 8 to 13%. So you can see there's a wide variety of percentages, guys, and there's nothing that is set in stone. It all comes down to creating that relationship. Boy, Jules, you're on the money for sharing some of these YouTube videos, guys. We've been, like I said, consistency, guys. We've been doing this on YouTube and Facebook for 4 years, over 4 years. Doing that every single week ends up producing hundreds and hundreds of videos on all these different topics in real estate. And so I'm glad we're able to share that, Jules. So thank you for doing that. Okay, guys, I'm going to try to hit up 1 or 2 more questions. So if you have something, throw it in the chat and I will get to it live. And if not, let's see. What else can we pick from this list? Ryan Anderton today, one of his first questions when he was getting started. And Ryan, I'm not familiar if you've been investing a long time or if you are just getting started, but one of his questions was, where do I find money and good deals? So Ignited members that are listening, I want you to answer this question and throw it in the chat. Where do you find money and good deals? Can you throw that in the chat, guys? I know that many of our Ignited members, many of you here in Fearless have raised capital, maybe significant amounts of capital. And where did you find that money? One of the ways that we found money, and a lot of the money and capital raising that we were doing was back in 2005, 6, 7, 8, 9. The ways that we found that money was networking with other real estate investors, building our brand with other real estate investors. Some of the topics we've already touched on during this segment. And we did it back in the day by going to live events. So we would travel all across Canada, to Ontario, to BC, different parts of Alberta. We would go to whatever real estate events we could go to, introduce ourselves, network, become known within those rooms as real estate investors and somebody that could bring a great product. We were investing, of course, in the Edmonton area. That's where we lived. And it happened to be rated one of the top places to be investing at the time. And so it was an easy sell for us. People found us to be someone that they would want to invest in because we showed credibility. We did the research, things that we talked about earlier, guys. And so where do we find the money? We find it by networking and creating relationships. And you can do that on social media. You can do that from your couch if you want. Somebody here, a Facebook user, is saying, have money looking for good deals. So that is a second part to that question, is where do you find the deals? If you have the money, well, you can either invest with somebody that does all the work, become a, what do they call that? Armchair quarterback when it comes to investing, or you can go out there and buy your own properties. So where do you find the good deals? I would say a lot of the good deals now, guys, are coming from wholesalers. They are coming from investor-focused realtors. A lot of the good deals are not necessarily on MLS. A lot of the good deals get passed from one investor to another investor. And let me explain why that happens. Because most investment properties have tenants in them. And what happens when that property goes up for sale and the tenants are in there, and maybe they see a for sale sign or they're searching realtor.ca and they see their house up for sale. Well, that freaks out the tenants. And a lot of times you lose your tenants. You now have maybe months of vacancy. Everything starts to go sideways for an investor. So what happens is most properties that are owned by investors, sometimes, especially if they're tenants or especially if they're multifamily properties, get transferred from one investor to another. And so working with the realtors that work with investors, they don't even bother putting these properties on MLS because they go from one pocket listing to you as a buyer. And so creating those relationships with investor-focused realtors, or creating those relationships with wholesalers, those that are doing assignments, finding the good deals out there, and then buying those assignments off of them, those opportunities off of them, is another good way to find the deals. And let me share a little tip too, guys, when it comes to finding deals, because a lot of times we think as real estate investors, the whole goal is to buy as cheap as possible and to sell as high as possible. And I'm going to tell you right now that that's not the case. You can make significant amounts of money in real estate by buying at market value and by selling at market value. You don't have to negotiate way below market value to make good profit in real estate if you're doing it properly. And remember, if you're really wanting to scale your business and you're really wanting to buy multiple properties at the same time, and you're really wanting to take this serious, you don't have the time to negotiate another $5,000 here or another $10,000 there. What you have the time to do is to duplicate your process. You have the time to find a good deal, find a good property. It may be at market, it may be slightly under, and move on to the next one. Okay, if we spend too much time trying to negotiate every last dollar, there's a ton of opportunity that slips through our fingers. Okay, so finding a good deal may be a great property that cash flows at market value in a good market. That's what you want to be looking for. Are wholesale deals, okay, good question. This ties in, are a good idea. And if so, where do you find them? Okay, you find them from wholesalers. So, there's a lot of wholesalers here within Fearless. And so if you're looking for a wholesale deal, put a post in Fearless saying, guys, any wholesalers here in this group, reach out. I'm looking to buy something soon. And people will reach out to you. Create those relationships and take it from there. Okay, thank you. It's Andrea. Thank you, Facebook user, Andrea, sorry. Sam, we're blessed to be able to attract investors just through openly sharing what we do and what our beliefs and find the investors in line with our vision. Absolutely. That's just creating relationships, Sam. So thank you for sharing that. Another one of our Ignited members, just being open and honest about what you're doing. That attracts investors. Trustworthiness attracts investors. Credibility attracts investors. That's really what does it. Okay, so there we go. We see some connections being made as of now. Another Facebook user saying, hey, Kevin, happy to chat about current project we have going on. We'll message you. This is what it's all about, guys. Put it out there. Let people know what you're doing. If you don't let people know what you're doing, nobody's going to know what you're doing. And you're not going to create those connections that you're looking for. Okay, guys, so there we go. We're going to conclude there. That was our last question. I'll give you 30 seconds. If there's anything else, throw it in the chat. Otherwise, we're going to leave it there. We completed another Ask Us Anything and a lot of really, really good questions. We did a lot of, what we would call newbie type questions, which are really, really helpful, even for us investors that have been doing it a long time, to kind of review the basics, because sometimes we make it more complicated than it needs to be. And reviewing the basics is very, very good. Oh, that's a really good question. How will the Oilers do next year? Well, it's Stanley Cup or bust. That's how I'm gonna answer that question. So my prediction is Edmonton will be Stanley Cup champions. Okay, so there you go. There's my prediction for what it's worth, guys. All right, thank you guys for joining us here for our Tactical Tuesday. We look forward to seeing you again next Tuesday. Join us again, and we will meet all of our Ignited members over in our Ignited Laser session here in about 4 minutes. So we'll see you over there. And do you see interest rates coming down? I don't anytime soon. There's a quick answer to that question. All right, guys. Have a great night, and we'll talk to you next week.